500 and NASDAQ closing at all-time highs. The Dow up, gold up, real estate.
Hey everybody, and welcome to another TrendSpider technical analysis series video. In this video, we're going to be going over ways that you can utilize unusual options data in order to make a more educated trading decision. Unusual options data comes standard with all TrendSpider accounts, so before we talk about how to trade based off of it, let's first quickly walk through what exactly unusual options are. The TrendSpider platform is currently able to track two types of unusual options data: option sweeps and block trades. An option sweep is defined as a series of trades that hit the tape within 250 milliseconds of each other, where at least 75% of the trades are at the bid or the ask, and the total premium paid for the contracts exceeds $20,000. A block trade is defined as a single options trade over $20,000 in premium that occurred at the bid or the ask. We can filter these unusual options trades by expiration date, premium, and strike price, and we can visualize the flow using the expandable dot plot graph right here. For simplicity's sake, let's use this graph in its most basic form and just make some simple visual comparisons between different names. So before we start filtering, let's first use the tool as a means of developing bias. In some cases, like this chart here on shop, we see an abundance of red circles and only a small amount of green ones. This means that the overall flow is more bearish leaning. If we see an abundance of green circles, like we do here on this chart for AR, that might suggest that the flow is more bullish leaning. Knowing the general feel of the flow can help us to develop the type of trade that we want to take. Next, let's note the size of the circles. The larger the circle, the larger the premium spent on the order. Let's inspect the next name. We're going to go to MAR here. On this particular chart, we see mostly smaller circles and only one or two larger ones. This means that most of these orders have smaller premiums. Now, that could suggest that there's less conviction in these plays, or simply that the bigger money players are not as active on this name. Additionally, if you do happen to see a really big order come in, like this one right here, that might give you a reason to inspect that order a little bit more closely. Compare this chart to the chart of AMD here, where we see many larger circles overlapping one another. The premiums here are clearly quite larger, the players are bigger and seemingly have more conviction. This could suggest a more robust options chain as well. Finally, let's look at dispersion of the orders. In some cases, like this chart here on the Qs, we see that most of the orders have an expiry in the near term. There are very few leaps contracts that meet the unusual options criteria. Compare that to the chart here on NVDA, and we see these options players a bit more willing to play expiration dates that are further out in time. Having a general feel for where the bigger money is positioned can be very helpful in developing a long or short bias. Once that bias is developed, we can take things a step farther and begin to whittle things down a little. One of my favorite ways to whittle down this data is by contract premium. $20,000 would be considered a very small position for a big fund. So if we want to get a really good idea of what the bigger money is doing, we can increase the premium amounts by sliding this bar to the right. Let's go through some great examples of big money showing up and a stock reacting in the direction the big money was positioned. First off, on the bullish side, let's take a look at this ticker right here, EQT. On May 18th, there was a $42 million block trade that came in for the $40 calls with a January 2024 expiry. Now we can see that price action here was suggesting a breakout might be imminent. In fact, it tried to on the day that they bought the calls. Ultimately, price pulled back a little bit before extending to the upside. But a mere 3 weeks later, this thing was trading up over 22%, a huge windfall for this particular call buyer. Let's check out the bear case. We're going to go to ticker EGO. I'm going to zoom out a little bit here. And we could see on April 20th, we had a buyer on the $11 puts for October expiry. It was just a $217,000 order, but check out this open interest value. 29,286% of the open interest. This is a huge relative size order for this particular name. And this buyer was not wrong. 2 months later, this name is trading down over 40%. Again, another huge windfall for this particular buyer. So we've gone over the bull case, we've gone over the bear case. Let's go over one other final case. I'm going to call this one the fake out. Now, what do I mean by a fake out? Well, oftentimes, market makers will provide the liquidity that retail traders are looking for and sell calls into breakouts or puts into breakdowns. Essentially, what they're doing is they're taking the opposite side of the trade. If price gets too extended to the upside or to the downside, and we see large orders come in the same direction as the move, that could be a sign that price might be about to reverse. I like this example that I found on KO. We could see here on, looks like May 18th, huge downside move, followed by a rally that almost fully takes back the entirety of that move. And then we see a huge call order come in on May 27th, the $60 call for November 18th expiry. It's a $13 million block trade that takes up 2,000% of the open interest. So what we assume in this particular instance is that maybe this particular buyer is selling these calls, not buying them. And what happens? Price pulls back, and at the lows here, or from the lows, this thing was trading down 10%. If in fact somebody did sell these calls, this again would be another huge windfall for this particular market participant. So there you have it, folks. Some quick and easy ways to utilize unusual options data in your trading. I hope you found this video helpful, and I look forward to seeing you in the next TrendSpider Technical Analysis Series video. As always, happy trading, and catch you next time.